All right, let's focus on crude oil futures. What is going to happen at the open tonight? Let's dive into the analysis. All right, so starting looking at a weekly chart, we were talking about this level right here. For several weeks, hanging out at 76.30 support. Just call it 76, and we finally let go. Came all the way down here. Look at that wick, all the way down here into the 618.764 zone. Now, I do consider this a supply zone down here. Call it 71 or even slightly below 71. Also, in the back of my mind, there's a much larger supply demand zone down here based on all of these wicks. Man, and it even came down and retested it again here. This would complete an M pattern, but that's for this to come all the way down to the mid 60s. There is a structure that allows for this to be nearing the bottom up here. So we'll have to see. And really, one of the things I love about Elliott wave is once you learn the nature of the different wave types, the character of certain wave types, knowing that really helps. And then we're going to drill down a little bit on the time frame, get a little bit more specific. There's a dog in my neighborhood. He doesn't like Elliott wave because you can hear him barking, I think, every time I come out here. Anyway, so looking at the daily chart now, I'm counting this as a triangle for a wave 4 triangle. And price, as would be expected after losing a triangle, is you have a sharp move, and then price can come back up and test the level where the triangle started from, which in this case I'm counting as a wave 3, the end of the triangle being a wave 4, and then now we are potentially in a wave 5 of C. And the way I'm counting it is an AB with a 5-wave move inside of it. And the whole thing is a diagonal structure, which if you know about Elliott wave, diagonals are not fun. You got to pay attention to the 3-wave moves and be ready for 3-wave moves inside of diagonals. So the way I'm counting this is 3 up for a wave 1. I'm sorry, excuse me, 3 up for a wave A. And then you have a very formless, difficult to count wave, which also gives you a clue that it could be a B wave. And where this terminated was max. Look at that, 886 is right there. B waves love the 764. Actually, let me just change this real quick. But B waves love the 764 to 886. So you got a wick down into that area. Could be a B wave, sure. And then the way this counted was best as an impulse with a wave 3, 4, 5. And then this is a ratio for waves 1 through 3 versus 5. I'll eventually do a video that explains this. If you're an LA wave guy, you already know exactly what I'm talking about here. So this was acceptable to 5-wave up, call it a wave C. So now you have an ABC for a larger degree wave 1. So now we're looking for a 3-wave corrective move for a wave 2 potentially. And so I think that is in play. So now really in terms of something more actionable, because I'm not trading a daily chart. I'm a scalper day trader. But it pays dividends to pay attention to the larger time frames, regardless of whatever time frame you're trading. It pays to scope out multiple time frames and drill on down until you find your area of action. You want actionable signals, right? So you got to know what time frame you're trading, whether it's Elliott wave, whether it's RSI, or whatever your methodology is. People always say know your time frames. Well, yeah. Know multiple time frames, but know the time frame you're trading. So I'm almost always trading. Honestly, I like the 1 hour, the 15-minute, and the 8-minute and 5-minute. I'm a day trade scalper, but of course I'm looking at the longer time frame. So now we're down, getting closer into my wheelhouse. So we understand the larger structure, right, that I just explained, which is all of this could be the bottom of a wave 2, but we are in a much larger diagonal environment. So that makes it inherently tricky because things are moving in 3s more. There's way more overlap. So the way I'm counting this is AB, and then the C wave, 1, 2, 3, and then a triangle, which actually looks beautiful. The way this played out, an expanding triangle in a wave 4 position. Now, let's say that this is wrong, the way I think it would be wrong, it's still very similar. So if this is the bottom of wave 3 here, where I'm counting it as a D wave, right here, and then this could be a wave 4, but I don't even like the way that looks as a wave 4, because it's kind of just straight vertical, as opposed to wave 4 typically being a 3-wave move. Whereas if I count the wave 4 as a triangle, you've got these zigzags inside of the triangle. 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. So my understanding of Elliott wave is if you're in a triangle, you got to have at least 4 waves that are moving as a zigzag. And this meets that criteria. It also meets the criteria in terms of the Fibonacci levels. Like this wave 3 is very near the 1618 of the larger structure. Actually, there it is right there. I've kind of faded it out a little bit, but let me make that a little bit brighter so you can see it. So this is a standard area for a wave 3 to terminate. So it wasn't easy going through this, but as a scalper, we enjoyed this. We enjoy this kind of thing because we're only looking for 20 to 80 pips at a time. So there's plenty of opportunity inside of a crazy triangle like this. Whereas if you're a longer term trader holding options, let's say, you're just burning time in this wave 4 triangle, and not ideal. But for folks trading futures, there's a lot of gold in these hills right here. So when this terminated, I'm counting this as I'm looking for a 5-wave move, right? Because wave 5 of C of 2, we're expecting it to be a 5-wave move. So right now, let's drill down actually one more level to look at this. What I was going to say is right now we're looking for this wave 5 inside of this downtrend right here, which I'm expecting to be a wave 5. And the cool thing, another cool thing about Elliott wave, of which there are countless cool things about Elliott wave, there's also a lot of drawbacks to Elliott wave, but for the purposes of this video, I am looking for price to terminate in this wave 4 and start creating some impulse looking moves lower. Now, as I was saying about Elliott wave, there are some parameters that come of this which are really helpful. So now this may have already terminated, okay, maybe, and it's already moving lower. But Friday afternoon, I discount the action going into a Friday close. It can do anything. It's not necessarily informative. Got to wait for the Sunday open. So this level right here, 76.40, this red line, is the bottom of what I'm considering to be wave 3, just above the 1618. So to me, that's an interesting level to observe. A, and then B, this level, which I'm counting as the bottom of wave 1, you can't really see the 2, it's so tiny. 3, 4, 5, 5-wave move, impulsive move down for wave 1, and then a 3-wave bounce for wave 2. So we project from this 1, 2 down to where the 3 may be. Now this 3 extended because here's the 200 fib down here, where I was just saying a more standard target for a wave 3 would be the 1618. But guess what? In commodities, especially crude oil, it's all over the place. And you expect to see these extensions. No problem there. So I have no problem counting this as a wave 3, so long as ideally it doesn't get above 76.40 again. But for real, it should not get, if it keeps coming higher, man, that's tricky. But for my scalping purposes, if it comes back up and gets above the level of this wave 1, which is 77.47 right here, I'll be looking at the structure here, and there should be some scalps up here. If get a 1-hour candle close and then a successful back test, and then it starts moving higher, the idea would be to scalp long from up here. However, even having said that, I don't like that as much as I like scalping to the short side. Another thing, just simple price action. Just forget Elliott wave for a second. If this is a bear flag, once it breaks, oh hey Ellington, I'm almost done, buddy. Huh? Okay, I'll be right with you in 2 minutes. So if, as I was saying, if this does not come up above there, I'm looking for the, if this were a bear flag, then you would expect price to back test where it lost it from. And you know, this is looking good as that. So just pure price action. It loses a level, it comes back up to retest that same level that it just lost, and then it got rejected. So is this technically a wave 4? Yes, there's no reason why this cannot be a wave 4. So what we want to see next is a impulse lower from that level. It's also interesting, call this a megaphone pattern or whatever. But the idea would be now is you don't want to see this come all the way back up and get up in here. Could it? Sure. Could it still be a wave 4? Yeah. What I'd rather see is this is nasty, man. This, some people call this a megaphone pattern because this is whipsaw and we're in a diagonal anyway of a larger structure. And crude oil, when is it not whipsawing on these lower time frames? It's always whipsawing on a lower time frame. So you got to use your fibs and keep the larger structure in mind. So I'll allow this to come all the way back up in, you know, call it 76 without getting any concern really. Actually, let me throw my buddy Armando in Miami has an interesting fib setup. I like it a lot. And it's real simple. Just putting the fibs, just grab the high and the low of whatever recent swing, called a swing low. I mean, a swing high to swing low. What is it? 75.21. And then I have it saved as for fib setup for Armando. I have it as a template. So bam, Armando in Miami. What's up, buddy? So just doing some quick and dirty here on the 20-minute chart, just in terms of zones. You know, this would be, if it's going to come back up from down there, really don't want to see it come back up much past this zone right here at this 618. What I would much prefer to see is if this is a 5-wave move down. Now look, I'm getting in the weeds of Elliott wave here. If I get a 5-wave move down to here, and then I could see a 3-wave move back up to there, 75.86. Then the key is this, all I'm trying to do is identify an impulse lower. That's it. So I've got a pre-saved, bam. So, you know, if we're going to see a wave 5, let me extend these because it's going to extend. Find me a silver pattern that doesn't extend in either wave 3 or a wave 5. See, this is really speculative here. If that's really 1-2, then this is going to come all the way back down here. If that's truly a 1-2, it will not come back above 75.86. Now, do I know what's going to happen? Of course not. One of the mistakes that I made early on in Elliott wave land was thinking that the Elliott wave measurements and the Elliott wave patterns were like a treasure map, and you just follow the map and you go to the treasure. Well, maybe, but maybe not. Elliott wave is just like any other methodology. As price action changes, we change, you know, the technical indicators are going to change, and Elliott wave may change as well. On the longer time frames, it's going to change less, and the smaller you get with the nano counts and the micro counts, the more it's going to change. So for just right now, 75.86 is a reasonable parameter. If we've started wave 5, you're not going to see back above 75.86. I don't really love this structure as a 1-2. I'll be surprised by nothing, but by Monday morning at the open, I think I'm going to have a much better idea because price is going to fill out overnight, all night Sunday. Here we are Monday, 4 in the morning, 5:36 in the morning. So yeah, by the time we get to this time point right here, we're going to have a much better idea. And I'll come back and measure again and take another look. But if this is a 1-2 already, then we're going to break these levels of support on Armando's fibs right here. We're going to break all 3 of these levels. We're going to break 75.21, then we're going to break 74.92, and we're going to break 74.56. If somehow the bottom is in, it's very obvious. This is a serious zone of resistance right here. So, and if we go back to this chart, I was calling that 77.47. So we're going to get all the way back up through this resistance and keep going. And there's going to have to be something impulsive. But from the looks of this foundation, to me, this does not look good. It needs to come back anyway, even if this is an impulsive structure and it's going to go higher. Like, as in, if this 3 is really the bottom, which I seriously doubt. But if it is, this is still going to need to correct and come back. So again, by Monday morning at the open, I think we're going to have a much better idea of what is going on in this zone. So to just sum it all up and get back to something more simple, above 76.40, I start really paying attention. And if it keeps coming, actually, I probably would scalp long. If it got above here and then held it and back tested, I'd probably scalp long as well. But I think the same holds true for this box up here above 77.47. Now, keep in mind, scalping, looking for 20 to 80 pips a day, and that's it. But the main parameter, just call it 77.47, and you want to see this thing create an impulsive looking structure, which means we have to look at the nano, smaller degree, to see, does it look impulsive or not. So there you go. Keep an eye on those parameters, and if you want to make sure you don't miss anything, just smash the subscribe button, because I do put out short updates as well from time to time during the week. Cool. Thanks for watching. See ya.